Hey everyone, I'm Sumit, and today I'm speaking with Matt Hogan, Chief Investment Officer at Bitwise Asset Management, a crypto-focused fund company that launched a spot Bitcoin ETF earlier this year. Since it began trading back in January, investors have put an impressive $2.5 billion into the Bitwise Bitcoin ETF, and Matt and his team hope to replicate that success with their spot Ether ETF. Will the SEC approve that ETF as well as other spot Ether ETFs soon? And if they do, what does it mean for the price of Ether? Let's find out. Matt, thanks so much for joining me.
Thanks for having me, Sumit.
Matt, it's been about a week since the SEC indicated that it may be open to having spot Ether ETFs trade in the US. What exactly did the SEC do on May 23rd? And what else does it need to do before these ETFs can start trading?
Great question. It was a big surprise. What the SEC did was approve the applications from exchanges like the New York Stock Exchange to allow these ETFs to list. The technical term is they approved the 19B4s, but what you should know is this is just one of two keys that have to turn at the SEC in order for ETFs to launch. The second key is what's called the S1 or the prospectus. That's a separate document that the SEC has to allow to go effective. They're currently reviewing those now. We're going to see some back and forth between companies that are trying to launch these ETFs and the SEC. When they and if they approve that S1, that's when you'll see these products launch. And that process could take anywhere from a few weeks to a few months. Historically, that's what we've seen at least.
Matt, is that second key a formality? Is there any chance that the SEC could backpedal and not approve these ETFs, or is it a done deal in your mind?
Sumit, this is crypto. Nothing is ever a done deal. Of course, anything is possible. Now, typically, the S1 is not a merit-based review. What I mean by that is they're not deciding, is this good or bad? Does it pass the test? It's supposed to disclose the risks. So it's all about adequately explaining the risks. That's why Bloomberg assigns a 99% probability that these ETFs will launch. But 99 is not 100. You can never say never. And there could be some sort of unclearable hurdle that we haven't seen yet that emerges in this space. So most experts viewing the space, and I can't speak to our specific application, but most experts viewing the space think we're on the path toward launching. But I'd remind you, crypto is crypto.
That's a great point, Matt. So it certainly seems like the SEC has done a full 180 here, because for weeks leading up to the May 23rd decision, people were talking about how the SEC wasn't going to approve spot Ether ETFs, and then all of a sudden, out of the blue, they seemingly approved them. Do you think this was a political move meant to cater to voters ahead of the elections later this year, or is it something else?
It's really hard to say. I think if you look at what happened in Washington broadly last week, we had the Senate and the House vote through SAB 121. That was the first pro-crypto piece of legislation ever in U.S. history to pass both houses of Congress. You had the House vote through comprehensive crypto legislation called FIT 21. You saw other positive developments and this seeming reversal on Ethereum ETFs. It's hard to look at the holistic group of those things and not see the influence of politics. On the specific ETF piece, of course, there's a lot of great data and a lot of great precedent that would push the SEC in favor of approving these Ethereum ETFs. They're already regulated Ethereum futures ETFs, and this just sort of follows that pattern. So I don't know how much politics you can read into the ETF specific move, but I think when you look at what happened in crypto last week, which was a complete sea change of Washington's attitude toward this entire industry, that definitely has the hallmarks of politics, voters, and the November election.
Gotcha. Now you mentioned Bloomberg assigning a 99% probability to spot Ether ETFs being approved. If that's the case, when do you expect that we might see these start to trade in the US? Is it a matter of weeks or a matter of months?
Yeah, I think we just don't know at this point. We will have to see, what you'll see in the record is issuers amending their S1s. That means filing a document that's edited. You can think of it like editing a term paper in college. What to look for is how much those S1s are changing. If the edits are just cosmetic, it means that we're close. If they're just changing a few words, if we're seeing substantial edits, that's a signal that it's likely to go multiple rounds of editing, and it could take a while. So you really have to wait until we see these first amended S1s, if that's what we see, and then figure out how big the changes are. That'll probably give you your best view on whether we're days, weeks, months, or more away from potentially seeing these products launch.
You know, Matt, when spot Bitcoin ETFs launched back in January, a bunch of them launched at the same time. Do you think we're going to see something similar happen with Ether ETFs? A number of them are going to launch on day one?
The short answer is I don't know. I do think that was a good precedent set by the SEC. You have to think about what investors got out of that. They got extraordinarily low costs. They got extraordinarily tight trading. They got a fair playing ground for companies to compete on. I think that's a pretty good setup. So I'm hopeful that that's what we see. And I do think it looks like we're moving in that direction. They did approve all the 19B4s at once. So it looks like we're trending in that direction, but we'll have to see what comes out.
And Matt, your company Bitwise plans to launch a spot Ether ETF. How is it going to differentiate itself from the competition? Is it simply a matter of having a low expense ratio?
Low fees are important. And when we launched our spot Bitcoin ETFs, we were proud to be the lowest fee spot Bitcoin ETF on launch day at just 20 basis points for BITB. I think you'll see us try to be competitive in the Ethereum space if it moves in that direction. But the big difference between Bitwise and these other players like BlackRock is that crypto is all that we do. Our entire team, 65 plus people, wakes up 7 days a week and thinks about crypto. We've been managing crypto assets for 7 years. It's how we trade. It's how we custody. It's how we do all of the little things. What we found is that many investors want to work with a crypto specialist who cares about the space, whose Bitcoin ETF donates 10% of its gross profits to our net profits to Bitcoin open source developers, who is building the crypto asset space alongside it. So that's one of the primary ways that we differentiate. What we found is that resonates with a portion of the investing public.
Matt, a really important concept when it comes to Ether is staking. Can you tell us what that is? And does the fact that Ether ETFs won't be allowed to stake make them less appealing to investors?
Yeah, absolutely. Staking involves taking Ethereum that you own and posting it as collateral to support processing Ethereum transactions. You effectively host it or stake it and say, I will help process these transactions honestly. And if I get caught trying to scam the system, you can take my Ethereum away from you. In exchange for doing that, people who stake their ETH receive a yield that can be anywhere from 1% to 5%. It's a couple percent right now. The spot Ethereum ETFs that we've seen, the filings, have stripped out the ability to stake from the 19B4s that went effective. So it looks like these spot Ethereum ETFs won't stake. Now, that means that individual investors who are comfortable with the risks of staking can earn a yield that won't be available to ETFs. I think that's fine. I actually think there'll be plenty of people for whom the ETF is still the most efficient, easiest, and low-cost way to gain exposure to this space, and they'll be willing to sacrifice that potential yield for the ease of use. Wall Street is all about wrappers. Every wrapper has its pros and cons. It looks like there's a pro of doing it yourself, which is you can access this yield, but there is a pro of the ETF as well, which is it fits in your brokerage account and it has many more protections around it than self-directing your own Ethereum. So everyone will find the product that fits them the best.
Do you think the SEC will eventually allow staking for ETFs?
I have a manifest destiny view of ETFs generally. I think eventually ETFs can do effectively anything. So as I personally project far down the road, I think we will get to the point where ETFs can stake crypto assets. But there's a lot of regulatory wood to chop between now and then. And I think the timing of that is certainly uncertain. If we look in other jurisdictions, if we look outside the US, there are ETFs that are able to stake and accrue those awards for investors. So I know that it's technically possible. And I think eventually we'll surmount the regulatory hurdles, but I don't have any sort of prediction on timeline or probability for that.
So, Matt, one of the reasons that some SEC officials were skeptical about spot Ether ETFs is this idea that Ether might be considered a security, and securities need to be registered with the SEC. Obviously, as a decentralized asset, there's no one to register Ether. So, if it's considered a security, then spot Ether ETFs couldn't be approved. Is that an accurate assessment of the situation? And if so, does the approval of spot Ether ETFs mean that the SEC doesn't consider Ether a security? It considers it something else, maybe like a commodity.
I think you have to take a probabilistic view to this. The SEC didn't come out and say that Ethereum, in its own internal view, is a commodity and not a security. Effectively, what it said is, Ethereum futures exist that are regulated as commodities and will allow these ETPs to list through the 19b-4 process as commodity ETPs. I know that that is a very close approximation to saying it's not a security, but I want to be clear that the SEC didn't draw bright lines, and there are still many gray areas in this space. But look, from 2019, when a director at the SEC said Ethereum evolved from a security at its initial coin offering into a commodity through the process of decentralization, most of the world has believed that Ethereum is a commodity and not a security. We added another brick onto that argument by seeing these 19b-4s approved. So that argument was significantly strengthened. I don't think it's 100-0, but I do think it is a very strong argument at this point. And I think we can march forward in our view that Ethereum is a commodity and not a security.
Matt, like we talked about earlier, spot Bitcoin ETFs launched back in January, and since then they've gathered around $13 billion of net new assets. How much money do you expect to be invested in spot Ether ETFs during their first year on the market?
Assuming that they launch, I think that they'll gather multiple billions of dollars. I don't know that they will match the spot Bitcoin ETFs, which were the most successful ETFs of all time in terms of launch flow assets. Bitcoin is a much larger market than Ethereum. As mentioned, there is this difference between staked and non-staked ETH. But I think these will be substantial successes. Could they gather $5 billion in assets in net flows in their first year? Yes. Would that make them among the top 5 most successful ETFs of all time? It would. We shouldn't let the sort of out of the park success of the Bitcoin ETFs cloud what I think will be a substantial success for the Ethereum ETFs. Investors want exposure to ETH. It's one of the most exciting crypto assets. It has some of the killer apps of crypto built on top of it, and the ETF will be a low cost and effective way to gain exposure to it. So I think it will be a significant success.
Matt, do you think those inflows are going to have a significant impact on the price of Ether?
Yeah, all else equal, crypto assets are driven by supply and demand. Ethereum is pretty unique in that there's effectively no net new supply because Ethereum is burned when it's used, and that burn offsets the issuance. And as a result, when you add a demand shock into a commodity, that should be positive for prices. We already saw the price of Ethereum jump 22% when expectations of the potential for launch increased significantly. I think if these ETFs are a significant success, Ethereum is on track to trade to new all-time highs.
We've talked a lot about Ether ETFs, Matt. Now I want to talk about the investment case for Ether more broadly. Who should consider investing in Ether through ETFs or otherwise, and why should they consider doing so?
Yeah, look, I think Ethereum is one of the most exciting technologies in the world today. It's a decentralized global supercomputer that you can build applications on top of. And there are some killer apps, Sumit, stablecoins, which are digital dollars that can be in the phone of anyone around the world, are substantially built on Ethereum. DeFi, which is programming money like software and could reinvent huge amounts of the financial ecosystem. Most of that is built on Ethereum. We've talked about tokenizing funds and mutual funds so that they can trade 24/7, 365. Well, BlackRock and Franklin Templeton and large asset managers are doing that on Ethereum. So Ethereum is sort of becoming this, app store or internet for finance 2.0. That's a multi-trillion-dollar market if it's successful. And you can gain exposure to that by owning ETH, owning the core asset that underpins that ecosystem. I think that's pretty exciting.
It absolutely is. And that makes Ether a little bit different than Bitcoin, right, Matt? How is the investment case for Ether different than the investment case for Bitcoin?
I think they're very different. I think Bitcoin is striving to be a digital store of value. Some people call it digital gold. I think it could be a monetary payment rail for international commerce. And I think those are very exciting markets. Gold alone is a $17 trillion market. And Bitcoin's, a $2 trillion asset. So it has plenty of room to run. But I do think Ethereum is an entirely different thing. It's this new Internet for Finance 2.0. It's a platform for killer apps that make use of public blockchains. It's a revenue-driven asset. I think many investors just want to gain exposure to everything that blockchains can do. If that's the case, you're going to want some Bitcoin and you're going to want some Ethereum. They're both going after really significant markets, and they don't really compete. They sort of coexist and complement each other.
Let's talk a little bit more about the blockchain network surrounding Ether, the asset. Back in 2021, all everyone was talking about was NFTs and DeFi. Is the interest still there for those categories, Matt, or has it moved elsewhere when it comes to Ethereum?
Yeah, no, I think those are two important areas. Look, NFTs are digital property rights, and that's a very big market. Some of them are silly, but some of them are really important. And we see, millions and millions of dollars in the NFT space and large players like Nike and Starbucks and others entering that space. I think that's significant. DeFi is also very significant, right? Even today, Uniswap, which is a decentralized trading platform built on Ethereum, does tens, 20s, $30 billion in trading volume a month with 0 employees. That's absolutely incredible. There are other killer applications, though. There, as mentioned, stable coins, largely built on Ethereum, decentralized social networks that are competing with Twitter, things like Farcaster, largely built on Ethereum, decentralized physical infrastructure projects, many of them built in and around the Ethereum network. It's kind of like the internet. In the early days of the internet, were news websites the killer app, or streaming baseball games on radio? Was that the killer app? Or storing your recipes, or blogs, or email? The internet was just a platform you could use for many things. The same thing is true of Ethereum. It's a platform you can use to move property, money, identity, and other unique goods over the internet. That is a huge addressable market. So yes, DeFi, yes, NFTs, but there's also a yes for 10 other segments, including some segments that we don't even know about yet.
Ethereum, of course, isn't the only smart contract platform. Solana is another popular blockchain network. Do you think the two can coexist, Matt, or is Solana a threat to Ethereum?
I think they can coexist. They offer slightly different value propositions. Solana trades off decentralization and uptime in favor of lower costs and a better user experience. I think goods without much monetary value have migrated to the Solana ecosystem, where highly valuable goods have stayed with the blue chip Ethereum ecosystem. That makes sense to me. If you look at most markets, there are usually a couple different competitors in that space with slightly different value props. There may be a high fee, sort of high reputation competitor, and then a low fee alternative. That's more or less how I see the Ethereum Solana ecosystem shaking out at this moment.
You mentioned the trade-offs that the two are making. One of the knocks against Ethereum back in 2021 was the high costs and long processing times. Have those issues been resolved?
Yeah, they more or less have been resolved. They've been resolved in two ways, Sumit. One, through the development of layer 2 solutions. Layer 2 solutions are sort of parallel networks that allow you to process transactions and then periodically post them to the Ethereum mainnet. We have things like Arbitrum and Optimism and Base, which now process more transactions than the Ethereum mainnet themselves. That's really helped. Also, the core Ethereum blockchain has gone through a series of upgrades, which have made these layer 2 networks more efficient. So you're really not seeing the same level of spikes of costs that you saw in 2021, when at one point it cost $200 to do a single transaction on Ethereum. Now those costs are reliably and consistently relatively low. I think that's going to lead to more use cases and more use of the Ethereum network because you can count on it to have that high throughput and low cost, sort of the broadband era of Ethereum. So it's not completely solved, but we've made enormous progress.
What about Bitcoin, Matt? Is it a threat to Ethereum in any way? I know a lot of people in the Ethereum community look at Bitcoin as the equivalent of a useless rock. It doesn't do anything, especially when it's not being used for transactions. But it looks like there's been a lot of innovation happening in Bitcoin recently, including the creation of a vibrant NFT ecosystem called Ordinals. Can you talk about that?
Yeah, absolutely. Developers have sort of stretched the capabilities of the Bitcoin blockchain to edge a little bit further into Ethereum's turf. But I think they have fundamentally different philosophies, right? At its core, Bitcoin is a very conservative blockchain that limits its technological upgrades and that always prioritizes decentralization and security. So it can do a few things. You mentioned the ordinals, NFTs. There's a little bit more programmability. We're seeing layer twos develop a little bit on the Bitcoin network. It can do a few things borrowing from Ethereum to make it incrementally more useful, but it remains 99% a monetary asset. Ethereum makes other choices prioritizing functionality over that security and decentralization, and that allows it to sing and dance and do other things. I think this is totally fine. If you look at any software area of the world, you have different competing platforms that do different things. This is the case here. Is there a little bit of overlap in their Venn diagram? Of course, but 90+% of their addressable markets are completely separate.
Final question, Matt. We've talked a lot about Ethereum. We've talked a lot about Ether ETFs. How high do you think the price of Ether can go over the short term and the long term?
Yeah, at Bitwise, we think that Ethereum could trade to new all-time highs this year. And I think substantially, if we see two things happen. We have to see these Ethereum ETFs launch and then be significant commercial successes. And we have to see major new killer apps attract massive use on the Ethereum blockchain, benefiting from this high throughput that we were talking about. If we see those two things happen, I think you could see Ethereum at $10,000 or more. But almost regardless, I think it's on its path to a new all-time high.
Matt, we're going to have to leave it there. It's been an absolute pleasure speaking with you. Thanks so much for your time.
Thanks for having me, Samit.
Awesome. So there you have it. Matt thinks that Ether could be headed to $10,000. Where do you think it's headed? Let me know in the comments. And if you want more content focused on investing, business, and the economy, hit that subscribe button.